Hello. Yes, students, today we are going to learn about calculating leverage. In your exam, there may be a sum of at least 7 marks from leverage analysis. First of all, to calculate any sum of leverage, you have to prepare a format. This format is known to you like as if you are preparing in marginal costing. Usually, first of all, you write sales. Out of this, you subtract variable expenses. Then you get contribution. Out of contribution, we subtract fixed expenses, and whatever you get, it is called as either profit or loss. In financial management, you have understood that this profit or loss is called as EBIT, that is earning before interest and taxes. Out of EBIT, first of all, we have to subtract interest on term loan or debentures. We get profit before tax. From this, we have to subtract taxes, which is generally 50%. We get profit after tax. Out of this, we have to subtract preference share dividend, and you get divisible profit. Many students might be aware this is a structure related to trading on equity. Now, we have three important things over here to calculate leverage. First of all, there are three types of leverage. As you can see, first of all, that is called as financial leverage. We consider it as DFL, degree of financial leverage. Second is called operating leverage. It is known as DOL. And third, together, it is called as combined leverage. It is known as DCL. Now, to calculate leverage, there are three important calculations here. First of all, we have to use contribution. I'm putting a star over here, contribution. Second thing which we need is called as EBIT. Again, I am putting a star over here, EBIT. And third thing which we need is PBT. We also know PBT as EBT, that is earning before taxes. There are three important things over here. Once again, contribution. Second, EBIT, that is profit. And third, PAT, profit after tax, or it is also known as EBT, earning before tax. I'm sorry, here I need to correct it. It is EBT, not PAT. I cancel it. Okay, going toward the formulas. DFL, that is degree of financial leverage, is equal to EBIT divided by EBT, that is earning before interest and taxes. This is 2, and EBT, that is 3. So we can say it is 2 divided by 3, EBIT divided by EBT. Degree of operating leverage is very simple. It is C. C is contribution divided by EBIT, EBIT. C is, we are giving number 1, 2 is EBIT, and 3 is PBT, profit before tax. In short, we can say 2 divided by 3, that is EBIT divided by EBT, is degree of financial leverage. C, that is 1 divided by 2, that is contribution upon EBIT, is operating leverage. Now, we have to use combined leverage also. It means EBIT, that is from formula 1, divided by EBT, that is multiplied by contribution, that is second formula, and divided by EBIT. Now, if you go for simplification, EBIT get cancelled, and left is C upon EBT, that is earning before taxes. Okay, now to understand it better, we are taking an illustration. You can see in your study material it is on page number 71, and this is on this is sum number 7. The details are like this. Sum number 7, you can go ahead with me in calculation also. Details from Zenith Limited's income statement are as follows. Sales rupees 10 lakh 50,000, variable cost 3 lakh 67,000, fixed cost is 75,000, interest rupees 1 lakh 10,000, and tax rate is given 30%. From this it is expected we have to calculate degree of operating leverage. In many sums there may be all the calculations like financial leverage, operating leverage as well as combined leverage. Okay, we will start the calculations from this sum. Okay, as you know the format, first of all we have to find out sales figure from the illustration or from the sum. As you can see in sum number 7, sales given is 10 lakh 50,000. So I am writing here 10 lakh 50,000. Out of this we have to subtract variable expenses. Now if you see variable expenses given in the sum, they are 7 lakh 67,000. So we have to subtract this 7 lakh 67,000. So we get contribution. Contribution is 2 lakh 83,000. Now out of this we have to subtract fixed expenses. That is also given in the sum. It is given 75,000. So 2 lakh 83,000 minus 75,000 is equal to 2 lakh 8,000. This is known as EBIT, or you can say it is profit. Out of EBIT we have to subtract interest cost. Now interest cost is given 1 lakh 10,000. So we'll subtract 1 lakh 10,000 from this, and we get 20 minus 11 is 98,000. 98,000 is called as EBT, or you also know it as PBT, profit before tax or earning before taxes. Tax rate is given 30%. So we'll subtract taxes 30%. Taxes comes 29,400. Usually we don't need taxes, but still we have calculated. So 98,000 minus 29,400 is equals to 68,600. Okay, now moving toward the calculation. First of all, we are going to calculate operating leverage, that is called as DOL, degree of operating leverage. As you know the formula, it is contribution divided by EBIT. Okay, contribution, as you can see over here, contribution is 2 lakh 83,000, and that is divided by EBIT. EBIT is 208,000, 2 lakh 8,000. So answer must be 1.36. Usually you get answer in generally 1, 2 or 5 in smaller numbers, and this is a leverage, so don't need any percentage sign or anything. Second thing which we need to calculate is degree of financial leverage, DFL. As you can see, DFL is equal to EBIT divided by EBT, that is earning before taxes. In the sum, EBIT, as you can see, it is 208,000, and if we divide it by EBT, EBT is 98,000. Okay, so 208,000 divided by 98,000 is equals to 2.12. Now if you see your answer, check your answer, the answer is given just 1.36. The reason behind this is they have asked only for degree of operating leverage, but we have additionally calculate degree of financial leverage also. Actually they have not asked for financial leverage, but we have calculated just for your knowledge. Now moving ahead, we need degree of combined leverage, that is DCL. Now as you can say, DCL is equal to C divided by EBT, contribution divided by earning before taxes. If you see above contribution, as you can see, it is 2,83,000. So I will write 2,83,000, and that is divided by EBT. EBT is 98,000. Now dividing this number 2,83,000 divided by 98,000, it will come, the answer will be 2.88. Okay, now all you need to remember is finally you need to remember the structure. That is very simple. Both the structures you have studied in the earlier semesters. The earlier part, the above this first part is from marginal costing, as you can see, and the second part is from trading on equity. That also we have discussed in the sessions earlier. So combinedly together, you can calculate the leverage sums. It's very easy. Just try yourself, try to solve furthermore sums given in the exercise, and you will be able to solve them. If you get any sort of queries or doubt, you can send me on email or you can contact me on WhatsApp also. My WhatsApp number is 9998007649. Thank you.